You stay here. Clear? Am I audible? Good morning, everyone. Welcome today again to our webinar, and I must apologize for yesterday's delay. So today we wouldn't delay any further. We will start with a little bit of a brush up of what we did yesterday, and then from there on we shall continue with what is remaining for today. So yesterday, well, we began with candlestick formations, and we have done the bullish candles, what were giving us indications of reversals. Now today we will be doing the reversal patterns for the bearish strategy. So it will be pretty much the same, but in the reverse. So yesterday we were looking for buying opportunities. Today we are going to study as to how we are going to look for selling opportunities. So this will be, or at least if you are not an FNO trader, at least to book profits. So that can be studied, and we will take it from here on. Yes. So today it's the bearish candlestick. Yesterday we studied the hammer. We studied the bullish piercing. We studied the bullish engulfing and the morning star and so on. So now let's do the reversal patterns for the bearish strategies. Now, as we discussed yesterday, what does the bearish candle imply? We open strong, but we close on a lower note, and that is how we get a formation of a red candle, and that is what we mean by a bearish candlestick. Now, hanging man, as we had studied yesterday at the bottom of the falling market, now we would be learning hanging man at the top of the rally. So hanging man is a single candlestick pattern which is formed at the end of an uptrend. This is similar to the hammer what we did yesterday, but this is what is going to give you a selling indication. So that is why we call this type of a candle is called hanging man. The real body of the candle is small and is located at the top with the lower shadow, which should be more than twice that of the real body. So the formula, the definition is the same as the hammer. So, but when this happens at the top of the rally, we call it the hanging man. The psychology behind this candle formation is that the prices opened and seller pushed down the prices. And suddenly the buyers came into the market and pushed the prices up, but they were unsuccessful. During the latter part of the day, we see the selling pressure coming in. And once again, the bulls come in to get the price higher. So it is a struggle now setting in for the bulls. So this has resulted in the formation of bearish pattern and signifies that sellers are back in the market and uptrend may end. So this is the first indication of a fatigue in the upward rally. So now how do we put a setup? So the hanging man setup patterns have been above average volume, long lower shadows, and are followed by the selling day, have the best chance of resulting in the price moving lower. Therefore, it follows that these are ideal patterns to use as a basis of trading. And upon seeing such patterns, consider initiating a short trade. How would you initiate a short trade? An aggressive trader would be that he will go short at the closing price, and the stop loss would be a little bit above the high of that particular day. So one of the problems with candlesticks is that they don't provide price targets. This is what we also mentioned yesterday. Therefore, stay in the trade while the downward momentum remains intact, but get out when the price starts to rise again. So the stop loss is going to be minimum, the high of the day, above the high of the day. So your risk reward will be a favorable one. So this is how you will be initiating a sell trade. So now I will quickly go through the examples, and that will make things clear for you. Have a look at this hours financial. We see the upward rally, then we see the hanging man, and then followed by. So aggressive trader would take part itself on the hanging man formation at the close with the stop loss of high. So that would be around about 2,400, and continue with the trade if the trade goes in the favor, and keep trailing the stop loss. So that is how you can run through the trade. And if you're not a seller, if you're not a short seller, the least you can do is at least book profit with the confirmation that after a hanging man, you are seeing another bearish candle formation that is making a lower high. The other example is National Aluminium. This has been just sometime in March. And we see that after the upward rally, we are seeing the hanging man. The stop loss would have been hit because the next day we saw that the stock has gone much higher. But you can yet again initiate another short sell strategy if the low is taken off. So this is how the failed trade can be again activated once the low is broken off. The other one now we are looking at is Rain Industries. So what are we seeing over here is that once we are seeing that, well, it is not at the beginning, at the peak of the rally, but we are seeing that the hanging man is coming eventually, whereby we can see a confirmation. Because otherwise also, if you would have seen the previous movement is like more or less like a evening star also. So what we learned yesterday in the morning star, there is a similar move in the reversal pattern as evening star, and then it is followed by a hanging man, which further brings conviction that yes, the stock is likely to fall. So this is how we are going to understand the candlestick formation and take our trading strategies accordingly. Now this is more of a clear one. We see that the stock is peaking up, and then we see the formation of a hanging man, which is again like a hammer, but in the reversal trade. So we would put the stop loss of the high made, that is the previous high candle. We normally take the high stop loss, which is the highest point, if it is close to the peak. So we would take the highest point as stop loss and run through the trade, and we would get good returns, because this is what it gave us, an ample downward run right from 2750 to 2150 levels. So this is what one way we have seen the falling strategy, and we can keep continuing with the trailing stop losses so that you can run through the ride. Another example is Oberoi Realty. The same example of a hanging man, keeping the stop loss of the highest point, which was the doji that we have witnessed, and we would go through this because the stop loss has not been hit, and we would go through the falling market. Now comes the dark cloud cover. It is similar to the bullish piercing. So dark cloud cover is a multiple candlestick pattern which is formed after the uptrend, indicating bearish reversal. It is formed by two candles. The first candle being a bullish candle, which indicates the continuation of the uptrend. The second candle is the bearish candle, which opens gap up but closes more than 50% of the real body. So this is exactly what we studied yesterday. The reverse was bullish piercing, and the dark cloud is also called as a bearish piercing, and that is what the retracement takes more than 50% of the previous candle, and this is an indication that it is the end of the possibility of the end of the bull run. So dark cloud cover setup, as always, the high of P2 will be the stop loss. Get into the trade and observe what happens the next day. So this is where we have the dark cloud. After the bull run, which we are seeing with the big prominent white candle, we see the stock has opened higher, much higher, but does not sustain, whereby the bears are taking control and dragging it down to nearly more than 50% of the previous candle. So this is a confirmation that yes, this is a dark cloud cover, and we are going to see the reversal in this particular stock. And this is what we are talking about is NLC India, which has happened just in the recent past. Now we come with Maruti. Maruti also, just in February, we had seen that the stock had come towards 9,000 levels. So after a prominent bull run, we see that the red candle making yet a new high, but does not sustain. The bears are taking control of it and dragging it down towards the 50% of the previous candle. So this is how we are going to see that the reversal has taken place. Similarly, I will not be wasting so much of time on explanation because we have to cover a lot. And this, I think the concept is more or less clear because we have studied in detail. Only thing is now what we are seeing, what we were seeing yesterday at the bottom of the rally, now we are seeing at the peak of the rally. So this is one more example, and one can see how the stock has fallen considerably from the high. Now, this is not so much of a prominent one because the previous one is just a bounce back, but it is a continuation of the downward rally. Here is the example of PI Industries. Once again, the prominent upward move, the criteria should be, I repeat, the previous rally should have at least 15 candles to make it a substantial swing trade or a positional trade. So here again, we see the, as noticed in the box, that the dark cloud cover brings a prominent fall. Again, the stop loss has to be the highest point. Now we come with the bearish engulfing. Same way what we studied about the bullish engulfing, we are going to study the bearish engulfing. The only thing that this will happen at the peak of the rally. So that is why from the bull, it is turning to bear. So we call it as a bearish engulfing. So the trade setup is again the same. The high of the P2 is to be taken as the stop loss and continue with the trade. So this is what we have seen in Polycab just some time back in May. The stock makes a new high. It is engulfing the previous bullish candle and it is closing low. So the stop loss over here would not be so very favorable because it is a big red candle. So what one can do is probably take small position and wait the next day if there is a bounce back coming in to continue go short. But the strategy should be that the high as the stop loss has to be observed. Similarly, we see in Piramal, the bearish engulfing gives us a prominent downslide. Here is one more example on Pidilite, as one can notice in the box, and we have got a successful trading strategy here as well. Now we see Petronet, once again, a very big bearish engulfing candle. So, well, one can take the minute the low of the previous candle is broken, one can get into the trade and keeping the high as stop loss. So, little bit of flexibility has to be there as to seeing the size of the candle. So, while you see that the stock is breaking the previous low, it confirms that yes, it is getting into the bear grip. Similarly, here is another example of LIC housing. So the minute you may not wait for it to close, but if the previous close or the previous low is broken, you can see that yes, it is getting ready for a bearish strategy. Now we come with a bearish harami. So yesterday we learned the bullish harami. What was it? The previous candle was a big red candle and the subsequent candle was a small green bullish candle. Over here in bearish harami, what you are going to see is the previous candle is going to be a big strong green candle followed by a small red candle, which is well within the range of the previous candle. So this is again another sign that the bulls have showing exhaustion, but the bears are taking control of the stock. So again, the trading strategy would be the stop loss will be the high of the previous day and we will be running through the trade. So here are the examples of bearish harami, and here is what we are seeing, that yes, the most ideal one would be the small body over here. Though this is a red candle, but yet the low is not broken. It is continuing to be in sync with the previous bullish candle, but then you see that the small candles are taking place, and that is what is leading to a fall. Here is another example of a bearish harami in Ultratech. This is more ideal. The upward rally continues. We see a strong white candle followed by a small red candle, which is well within the body of the previous candle. So the stop loss, as always, would be the high, that is about 6,800, and we shall be going for a sell strategy for Ultratech Cement from here on. Similar we will see in Titan. Now this is another example, but because it is not at the peak of the rally, the market is consolidating after the stock is consolidating after a substantial fall, not knowing as to what needs to be done. But when you see a confirmation that yes, after a bullish candle, we are seeing a small red candle taking place, but well, I will not be going so aggressive over here till I see a confirmation of breaking the red candle, because as I told you, when it occurs at the peak, it gives in better significance. It has turned favorable in our trading strategy over here, but it is not coming at the peak. We are seeing that the fall has already been witnessed, but there is a continuation of fall which is likely to take place. Hence, we take less quantity of a sell strategy, and after a confirmation of breaking the low of the white bullish candle, it confirms the view that yes, the stock is witnessing exhaustion and the bears are taking control of it. So this is one more example of thyrocare, so beautifully shown, and see the downward journey that one is witnessing right from 1000 levels to now 600. Now this is Team Lee Services. Once again, after a bull run, a small bearish harami forming, and there we see the downslide happening. Now we see evening star, the opposite of the morning star, what we studied. This is the same definition, same logic, but it happens at the peak of the rally. So I will not be wasting time in explanation because we have yet to cover stochastic. So just as a revision, the previous candle has to be a green candle, followed by a new high forming a doji or a spinning top, and the third candle is followed by a gap down, and closing is equivalent or lower than the P1 candle, which confirms that the bull trend is coming to an end and the market is going to get into a reversal, getting into the sell strategy. So what will be the setup? As always, evening star also study of 3 candles, just like morning star, study of 3 candles. So short the stock on P3 around the close at 320 after validating that P1 and P3 form an evening star. To validate the evening star formation on day 3, one has to evaluate the following. P1 should be a blue candle, which in prior case we had studied that P1 should be a red candle. P2 should be the doji or the spinning top with a gap up opening, same way what we studied with the gap down opening in the morning star. P3 should be a red candle with the gap down opening in morning star. P3 should be a green candle with a gap up opening. So the logic, the rules are the same, but in the reversal pattern. So the current market price at 3:20 p.m. on P3 should be lower than the opening price of P1. Both risk taker and risk averse can initiate the trade on P3. The stop loss of the trade will be the highest, that is of P1, P2 and P3. So of course it has to be P2. So here is an example of Amar Raja battery, and we see that there is a bull run taking place. There is a doji with a gap up opening and then followed by a red candle which is lower than the first P1. And there from there on we see it is an evening star and the stock slides down. Same way we are studying in Voltas. It is shown to you in the box and highlighted with a spinning top. So this is what we see, that the stock is getting into a bearish grip. Same way, a prominent one now you're seeing is Glenmark Pharma. So good, strong bullish candle followed by a doji, and then we see that the stock is falling downward with a red candle, occurrence of a red candle. Here is another Gujarat State Fertilizer, GSFC, and see the bear run that we are seeing subsequent to the formation of the evening star. Here, this is one more of Indus Towers. And see, the stop loss, I repeat, has to be maintained at the highest point, that is the P2 candlestick. Now, opposite to the 3 white soldiers, we are going to study 3 black crows. 3 black crows is, of course, an indication of a strong downward journey, strong bearish move. So this is the opposite of 3 white soldiers. Same logic, the 3 strong bodies, red real bodies with smaller wicks, and each one has to make a new low, has to open well within the real body of the previous candle, and the same rule applies for the third candle as well. So once you see this, and the occurrence of this at the beginning of the peak, nearing the peak, is giving us a greater meaning because it is going to give us a strong downward move. So this is the strategy that one should follow. The same rules, stop loss should be the highest point, and continue with the trade and keep trailing your stop losses once the 3 candles are broken. So here is an example of Cipla. We are seeing that the red candle, which also is a hint of a bearish piercing or the dark cloud. Second one supported, third one supported, giving us a convincing view that yes, this is also the indication of a weak bias. Here is another example of in Coforge, three black crows, three consecutive red candles, followed by the strong downward move that we are witnessing after that. One more example of Colgate-Palmolive. So go all sell short and keep your stop loss right at the high, and you can also call it nearly as a bearish engulfing, but the low is not broken. So, but yes, it opens up strong. It can be called as a dark cloud also. But just to support the view, three big healthy red candles which form the three black crows are giving us an indication that yes, we are in for a deep, good corrective move coming in from here on. Same way in Dr. Lalpath, Jubilant Ingravia, what we are seeing in the box, what we are projecting as the three black crows, and from there on we see that downward journey begins. Now we come doji. So doji yesterday was mentioned that yes, what is it? When there is an equal participation of the bulls and the bears, and market is either coming to a pause, halt, or it is showing some exhaustion that yes, now there is equal participation, whereby earlier we were witnessing only the strong bulls or only the strong bears. Now there is a participation coming from both the bulls and the bears. That means the buyers and the sellers. Buyers bhi hai, sellers bhi hai, dono equally participate kar rahe hai. There is a tug of war between them, which leads to an indecisive move. So kya hota hai, usme body nahi banti hai. The opening and the close comes more or less to the same level. So we do not have body. There are different types of doji. There is a common doji, which is like a cross over here. There is a long leg doji, which means that as you see the wick down below is a long leg. Dragonfly doji means high banke upar ka udhar hi sustain hua hai aur wahan se selling okay, again it has come to the high point. And then we have the gravestone doji. So gravestone doji is where the stock opens high but closes at the low. So we are seeing that it is a part of exhaustion of the bullish view. Now doji's trade setup. The doji candlestick chart pattern is a formation that occurs when a market's open price and close price are almost exactly the same. This is what we explained, that there is no real body. It comes to the same level. There are different variations of the pattern, namely the common doji, that is the cross shape, the gravestone doji, the dragonfly doji, and the long-legged doji. So remember these diagrams, which I will be forwarding the slide. So you have to remember these formations for easy understanding. The vertical line of the doji pattern is called the wick, and while the horizontal line is called the body. The wick can vary in length, and it also represents the highest price. The bottom represents the low. The body represents the difference between the opening and the closing price. This element can vary in height but not in width. As I told you, there is no occurrence of a body. The size of the open and the close is nearly the same. So it hardly has a very, very thin, like a slash. So it is called a doji. So a doji candlestick is formed when the market opens and bullish traders push the prices up, while the bearish traders reject the high price and push it back down. It could also be that bearish traders try to push prices as low as possible, and bulls are fighting back to get the prices back up. So in a common explanation, it is a tug of war, indecisive movement in the market, whereby there is active participation from the bulls and the bears. So that is not giving you any clear direction. But it definitely tells you that yes, all this while, now look at this UPL chart, we are seeing that there is a one-way move. There is no conflict in interest. It is only the strong bulls which are taking the price higher and closing also near the high. But the minute we see that there is a prominent doji happening at the peak, why would I say this peak? Because after this, when we study stochastic, we will be understanding that it is happening at the overbought zone. So when it is happening at the overbought zone, it is having a very valuable meaning that now there could be some exhaustion coming from the bulls, and bears are likely to equally participate. So this is now the doji which has occurred in the bear run for a reversion of a bullish formation. This is again another one long-legged doji, which has happened at the end of the downward rally. And now we are seeing a reversal. Another long leg in Tata Coffee. Have a look, so very prominent. And we are seeing that, yes, the low can be acted as a stop loss. And another thing what one can see is we cannot call this a morning star. Why? Because it is not, the doji has not taken formation with a gap down. Normally in the morning star, it has to be with a gap down. But over here, the stock has opened, but yet continues to go lower. But the bulls are trying to get the stock higher by active participation. Another one over here at the top of the rally is a dragonfly doji, whereby the open and the high are at the same level and the stock goes down, but the bulls attempt to get the price higher and then followed by a spinning top. And that is where we see that the stock is ready for a fall. Similarly, over here, we see a gravestone doji. And again, we see that, yes, the supporting view of a downward journey continues because it is opened with a gap down. The subsequent candle we witness is with a gap down opening and the slide continues. So as you always, the stop loss will be the high of the previous two candles. Here is once again long-legged two dojis, whereby there is still some time being bought that whether the stock is ready for a rally, but it is confirmed with the next high bullish candle. So aggressive traders can start buying here with the lowest low of between these two long-legged doji as your stop loss. Now comes spinning top. A spinning top candle, like any other candlestick pattern, does not give us a trading signal for entering or exiting. The spinning top is a candlestick pattern having a short real body. It is similar to doji, having the upper and the lower shadows or the upper and the lower wicks. It represents indecision, but the future price movement, but it also gives us useful information about the current scenario in the market. The trader can use this information to position himself in the current market. Means it is very similar to a spinning top by itself does not give you any indication. It again means that there is active participation between the bulls and the bears. So how do you do the spinning top trading setup? Same like doji, you take the low as the stop loss for an upward rally and you take the high as a stop loss for the downward rally. Now, there is a very common word which we use, maribozu. What do you mean by a maribozu? Maribozu is a candlestick which is so strong, a thick red or a green body, which does not have a wick. Means, what does it mean? The stock has opened at in a bear market, the stock has opened high, it sustains over there and then does not make a new high and closes at the lowest low that is made during the day, whereby there is no wick formation on either side. That is called a maribozu. Similarly, in a bullish move, when the stock has opened low and does not make a new low, but closes at the high made of that day, whereby there is no wick on either side, that is what we call a maribozu. So the spinning top is a very interesting candle. Unlike the maribozu, it does not give the trader a trading signal with specific entry or an exit point. However, the spinning top gives out useful information concerning the current situation in the market. The trader can use this information to position himself in the market. If you look at the spinning top in isolation that we just spoke, it does not mean much. It just conveys indecision between both bulls and bears, and we are not going to make a decision on basis of that. However, when you see the spinning top concerning the chart trend, it gives out you a message based on which you can position in your stance. So when you see a series of candlestick occurrence, and when at the top of the move you see a spinning top, or at the bottom of this you see the spinning top, it indicates that now there is going to be active participation. So upper shadow tells us that the bulls did attempt to take the price to the stock higher, but they failed in doing so. So what are we trying to say? That there is participation coming from both the bulls and the bears. Thus, we can consider that an attempt has been made by the bulls for taking the market higher, but they were not successful in doing so because there is also the participation coming from bears, whereby they are trying to take the stock down. So thus this can be considered as an attempt by the bears to take the stock price lower, but they were also unsuccessful in doing so. So here is the example of the spinning top, which in isolation does not give you, it is shown by the arrows, but in isolation, it cannot give you any confirmation. Now here is another. Now after a decent rally, when you see at the top, then you can take a chance because we have seen a firm upward move coming in, and at a substantial level, we see it coming. So this could be the just a bounce back rally, and whereby we are seeing that the stock is ready to correct again. But have a look over here. This is so very prominent because the previous move was a prominent downward journey, and at a very prominent part in the oversold zone, we are seeing that the occurrence of spinning top is saying that there is going to be participation of both the bears and the bulls. The bulls are trying to take the price up. That is what it is trying to say. So now we end over here our first part of the bullish candlestick patterns and the bearish candlestick pattern. Now just in 2 minutes break, I will now run you through the study of all this that we have done with the help of an added indicator called the stochastics. Okay, so now we will be studying this. I'm taking you through part 2, whereby we will quickly, what is a stochastic indicator? Basically, stochastic indicator is plotted underneath your chartical presentation of candlesticks. I will just take you through. Yeah, let us understand this. This is basically just for your understanding. We have plotted a bar chart. This is how the bar chart is. And underneath, we plot a stochastic indicator, which is very ready-made. You do not have to put in any strategies or formulae, but it is available on all possible charting tools. That is charting.com, tradingview.com. These are the ones where you can easily get it. Basically, this is what it is, an indicator which shows overbought, oversold. What do we mean by overbought, oversold? So when the stock has corrected, when I all this while I have been mentioning that it is an oversold, the indicator goes below 20. So this is an evaluation. It is a scale between right from 0 to 100. Above 20 is the reversal. Below 80. So we have two extreme points, 20 and 80. So when the indicator crosses the 20 point, it is called coming out of the oversold. When it goes above 80, we say that the stock is getting in the overbought category, and we may at least book partial profit, but the confirmation of a reversal will come in when it breaches, it goes below the line 80. So it is more of a leading indicator used for momentum trades. So yesterday I could gather that there were many who were intraday traders who were interested in intraday trading. So stochastic works very well in the momentum based trading and for quick trades. So for 15 period charts, for 30 minute chart, one can use stochastic. It runs very well for momentum-based trading. There is also another indicator which learns on a similar pattern is RSI, that is Relative State Strength Index. The difference between Relative Strength Index and stochastic is that RSI works, it is called as RSI, it works well in a trending market. Stochastic works quickly for short-term trading strategies. So this is why we have chosen stochastics today. Sorry, and as we progress in our studies gradually, we will be introducing other indicators also. So let us understand the theory. It is a leading indicator as gives us advanced signals before it is reflected in the price behavior. In an interview, George Lane said that stochastic doesn't follow any price or volume. It follows the speed. Mind you, this is very important. It follows the speed of price momentum. And as a general rule, the momentum changes direction before the price changes. So this is how quick the stochastic works for you. But it also, the major drawback is that it also keeps changing very fast. So you have to go in sync with your candlestick position also. So this is what the stochastic is going to help you. It definitely tells you. Yesterday, someone was asking me that how do we set our targets? So this is one of the ways of setting your targets in intraday. When you know that your indicator is going into the overbought, you have to be cautious. You have to probably book profit. Maybe it does not mean that, yes, it is going to show reversal, but the minute it breaks the 80 line, it goes below the 80 line, it is a confirmation that, yes, now the strength of the stock is diminishing. So this is what we mean by stochastic indicator using with your candlestick charts. So now just for brush up, a reading above 80 indicates that the instrument is trading near the top of its high-low range. That is meaning it is in the overbought. A reading below 20 indicates that it is trading near the bottom of its high-low range. So reading above 50K indicates that the instrument is trading within the upper portion of the trading. So once it moves above 50, it also means that the stock is gaining further strength. And when the indicator goes below 50, it also means that it is losing the strength on the buy side, but there is further fall likely to occur. So when the stochastic lines are above 80, the indicator signals that the instrument is overbought. When the stochastic lines are below 20, it indicates that the instrument is oversold. So overbought and oversold levels are useful for predicting trend reversals. If the stochastic indicator falls from above 80 to below 50, it indicates that the price is moving lower. This is what we just spoke. If the indicator moves from below 20 to above 50, we know that there are higher chances of stock going to higher levels. So traders should also look for divergence. I will explain to you as we progress in our chartical study, what are the positive divergences and what are the negative divergences. So this is when the trend line of the stochastic and the trend line of the price move away from each other. This theory you may find it a bit complicating, but when I explain to you with case studies, you will understand better. So in stochastic, there are three things one sees. There is a level 20, there is a level 80. And when the stock goes below 20, we say it is in an oversold. When the stock goes above 80, we say it is overbought. So this is how a trading rule can be formed. When the stock comes out of the 20, it rises above 20, you say that the stock is on rise. Further confirmation comes when the indicator goes above 50. Likewise, when the stock goes below 80, the indicator goes below 80, you know it's time to sell. And the further confirmation of weakness comes in when the indicator breaks the line 50. So 50 is basically the median, and 20 and 80 are the extreme points of oversold and overbought. Now, stochastic divergence. What do you mean by a divergence? Divergence is when the price. So let's talk about negative divergence. Negative divergence is when the stock has been continuously making higher highs, but the indicator is not making higher highs, but it is probably making a low, if not at the same point. So it is making a low. So what does it mean? That there is exhaustion coming from the bulls. It's a matter of time. The bears will take control. So it's a word of caution to book profit at those levels and exit your buy strategy. Likewise, when in a falling market, the stock keeps making new lows, whereas the indicator does not make new lows. Probably it shows moves in the reverse direction. That is, it continues to make higher lows. That is the indication that the bears are showing exhaustion. Now it is time for bulls to participate. At least book your short sell strategies and time to go into the buying mode. So this is what we mean by a negative divergence and a positive divergence. Negative divergence comes at the end of the upward rally. Positive divergence comes at the end of the downward rally. So this is how a stochastic is going to help us. I shall be teaching. Now let's have a look. We have the same chart, Ashok Leyland, when we studied hammer. In sync with that, have a look at the formation direct move of the stochastic. So stochastic, we have seen, is coming out of the oversold zone. We have plotted this, which is ready-made. We do not have to break our head as to which one. Once you get a grip of it, you may probably change the speed of the K and the D line. But right now, let's learn with the one setup that we get it by default. So as soon as you see that there is a hammer formation, the stochastic also is getting out of the oversold zone. That implies that yes, the stock is ready for an upward move. So place your buying bets right there with the stop loss of low below the lowest low point of that hammer. So this is how stochastic has helped us to further bring confirmation to our buying view. So yesterday, as I told you that we do not set targets with the help of candlestick. We do not create buying strategy only studying one particular study. You have to have a conviction coming from 2 to 3 indicators. 2 to 3 indicators, if they support your view, then 70%, 80% of your trade will go right. Similarly, have a look over here in AU Small Bank. We studied hammer, and likewise you see stochastic giving you a signal coming out of the oversold zone, and it confirms a view of a bullish bias. Now, this is what we are talking about, positive divergence. Why positive divergence? Because it's going to give you an idea of buying. When it's buying, it's positive. When it's selling, it is negative. So the stock over here, if you see, we have plotted it with a trend line. The stock continues to make new lows, whereas the stochastic is making a higher low. It is coming out of the oversold zone. It is not in sync with the price movement, which is giving you a hint that go all out because the bears are exhausted and the bulls are going to take control of it. So positive and negative divergences don't work well at every occurrence. They work well only at prominent falls or prominent rises. And what do I mean by prominent? Well, that can be helped by a Fibonacci scale. So when it comes after a 50% retracement or a 38% retracement, that is what I mean. If it occurs at those levels, it is called prominent. So Fibonacci will come much later. Right now, we will just study for these two things to make things clear, and we will be saying, so in your language, from what we have studied, if the positive divergence takes place after a prominent fall, which in this case has happened, because we are talking about Balrampur Chini, right from 500 levels to a corrective move of 330 levels, we are saying that this fall has been very prominent. And now with this occurrence, in all likelihood, the stock is likely to show reversal sign. One more case, along with hammer, we are seeing that the stochastic is coming out of the oversold zone and giving you a buying indicator. So would you buy when it is in oversold? No. When it comes out of the oversold, it confirms that yes, the bearish movement is going to come to a halt. This is exactly what we see that yes, as an aggressive trader taking the idea only of the hammer, yes, you would with the stop loss of the low of the hammer. But you can add your position once the stochastic comes out of the 20 period. So that is what it is confirming, that yes, it is coming out of the oversold, and you may further add when the stochastic comes out above 50. Now we studied bullish engulfing, which we all know. I shall waste no time in that. But here, once again, you are using the stochastic indicator with a positive divergence. Positive divergence, I repeat, stock makes a new low as compared to the previous one, whereas the indicator, here we are talking about stochastic, it makes a higher low. It does not make a new low, it makes a higher low, and it goes above 20. That is a further conviction that yes, the worst is over. It's ready for a takeoff on the upward side. Similarly, over here in another chart which we had just studied, well, we will add few quantity just at the bullish engulfing occurrence. You can add furthermore when the indicator is supporting. So this is how, as new traders, do not park all your money in one go. First take 20%, 30% of the position that you are intended to take, and then go all out once you get the support of your indicator. So it becomes more of a favorable trade. This is another example. Bullish engulfing itself at a prominent area. Yes, we are ready for now signs of reversal. And in this, I had told you, this is a range bound stock. It is now showing some strength. We will also take volume into consideration over here. And then volume is always a criteria. Less volume is not allowed. Decent size of volume with this formation is always a added qualification to get into the buy trade. Here is one more sign. So see how beautifully in sync with the candlestick study and the indicator study, how comfortably it gives you a smooth run to get into the buy trade. And it will be really a pleasure if you follow these rules and get into your buying strategy. You will never be nervous, or they will never be anxious as to what is going to happen about your stock. You know where to plot your stop loss. You know what is the target. So when you know only these two things, where will you exit? When your stock has got into the overbought, at least book partial profit, because getting into overbought does not mean that it is the end of the rally. The minute the indicator breaks the 80, that confirms that yes, there is selling pressure coming in, because overbought situation can last for a while. If market is going through a strong uptrend, we can say that the upward rally is likely to continue and the oscillator can sustain at the overbought zone. So similarly, in a bearish market also, we can see that the stock can remain in an oversold zone for quite some time. There is one more example of a positive divergence, and see how beautiful we are seeing the run coming in. Now we have studied the bullish harami. We shall study now how it has helped us with the help of stochastic indicator. When we are getting the bullish harami formation, see the position of the stochastic, ready for a takeoff, ready for a close about 20, get into the trade and put your stop loss as low of the lowest candle. Similarly here, add little position when your bullish harami takes place. Confirm, see it with your stochastic. The minute stochastic comes out of 20 and you see a new rising candle, add more to your positions and start observing your stop losses. And as you see the stock going higher and higher, keep trading your stop losses. This is another example of Poonawalla FinCorp. You see that the bullish harami has taken place, and from there on, also the indicator is supporting you, that is the oscillator stochastics. So this works very well. Right now, we have shown it all on daily chart. Even on daily chart, it is working, but works very well for intraday, especially when the market is sideways. When market is sideways, stochastic works very well as compared to RSI, because RSI works well in a rising or a falling market. So no single indicator in isolation is going to give you 100% results. You have to have a bank of knowledge on at least 2 to 3 strong indicators. So I think along with this, one can also use moving average. One can also use RSI. So as the market scenario changes, when you are seeing a sideways market, focus more on the moving average and the stochastic. Volume, of course, needless to say. And when it is a trending market, also take a firm view, because stochastic can give you choppy moves whereby it can give you early entry and early exit, whereby you will miss out on the big up move. So that is when you will be taking help of RSI. So this is how you shall be toggling between your 2 to 3 indicators. Here is again a bullish harami, what we are seeing, supported by the stochastic indicator. How beautifully, now this is how, what I mean is such a smooth run, no confusion, no complication. If you know your work well, simply use the rules and go through the, it is all about patience. Market is all about, first of all, discipline. Your trading rules have to be very much in place. You cannot fluctuate. A stop loss hit means exit. Targets met with, overbought, please book profit. So greed and panic, they really work very well, because at the end of it, market also works a lot on psychology. So once you know that, no, I am going to follow my indicators, no matter what others say, no matter what newspapers say, no matter what channels tell you, please have faith on your studies, because that is what is right for your trading strategy, and that is what will give you winning trades. Do not get biased opinions by what you hear from channels, by what probably even I may say. Use your own strength of your knowledge on these indicators, on these formations, because this is what the chart is talking to you. Once you have a thorough knowledge, once you regularly do your studies and see the chart, you will know what each chart, what each candlestick, what each movement is trying to tell you, what the indicator along with it is trying to tell you. You will not need anybody's opinion, or what is happening in Russia, what is happening elsewhere in the world. You will just not need anything. It is only your chartical study, your candlestick study, your moving average study, your stochastic study, which will guide you to take your healthy, positive trades. So please do not mix the fundamental and the technical. Yes, fundamental strength is means it is going to tell you how strong is the stock going to do. So that can be an added this, but just because you have read a report, for example, a Reliance coming with 3,200 target, not necessary it will happen now. Because if the market gets into the corrective move right now, not in a hurry will Reliance go to 3,200 levels. Please read your charts very, very systematically, step by step, learn whatever we have done in these 2 days. Please, I would request you to go through these studies. Just do a case study of probably 4 to 5 stocks and the major index, that is Nifty and Bank Nifty, and see how beautiful you will be able to carry on your trades. So now once again, we shall carry on with what we have studied. It will be a revision plus with the added indicator, stochastic indicator. So just as we studied Morningstar, study of 3 candles, the first P1 has to be a red bearish candle, followed by a gap down opening. It could be a doji or it could be a spinning top. The third one has to be a bullish candle with a gap up opening, and it has to go high as the P1 and close above the open of that. So this is what we are going to study, and along with that, now let us see how our Morningstar formation with the indicator helps us. So here, have a look. The indicator has continued to be in a overbought zone, giving us an idea that yes, you may not go short sell. You may partially keep booking your profit or start keeping a stop loss, trailing stop loss, and see how beautifully you have got your upward move. Now, as you can see that there is a dotted line and there is a strong line in the stochastic. So the minute you see that the strong line crosses the dotted line, you are seeing that there is a strong momentum. So likewise, even on the higher side, so this in this case, it goes above the dotted line. And in the downward journey, you are seeing it is crossing below the dotted line, which implies that there is strength in the upward or the downward rally. Now, once again, you see that with the occurrence of morning star, have a look. If we are in the oversold zone, so you will not go all aggressive. Aggressive trader can take some position with the lowest low, that is the lowest low of the 3 points, that is the doji, and you will go through the trade, add more position once we see, thank you, once we see the stock going above the oversold zone. So this is what we are going to do in a trading strategy. Go take some position at the occurrence of the morning star, confirm it with your indicator, add more, and the stop loss remains as the lowest low of the doji, and then run through. Once you see that the stock is rising, making higher lows, you will elevate your stop losses. So that is what we call as trailing stop losses. Similarly, now we are seeing one more beautiful case of morning star. Along with that, we are seeing the indication buy signal coming from stochastic, and how smooth. This is the daily chart, so there is no noise, there is no complication. It has moved very well and supporting our views of. Now see, this is another notice. When you know that it is a strong uptrend, you see that there is a dip. Okay, so this is very interesting. Now, I will teach you in this case also. Gujarat Ambuja Export, the first trading strategy we are seeing is right at the first reversal, that is morning star. Along with that, we are seeing that the stochastic indicator has given us a buy signal. We continue holding till we reach the overbought zone. Over here also, we have seen that the stock has made a dip, but still you have a look, the candles have not fallen down. So once the low is breached, you will exit your buy strategy. It again makes an attempt to give another attempt to go higher. So yes, you are still in the trade, your stop loss has not been hit. Now over here, when the stochastic is going down, you, of course, how would you know at that point of time that it's what the market situation is you will book your profit and not be in the trade. But when there is a strong upward continuation of the upward move, you will see any indicator. Now the rules are the same for stochastic also and RSI also. It makes a low at around 40, 45. So that is a median line, right? I told you that the midpoint is 50. That is a median line. It again bounces back. That means it is a very strong signal that it is not the end of the rally. The market, the stock over here, Gujarat Ambuja over here, we are seeing that right from 21st of March to April 8th, it has just been consolidating. But once you see with that indicator, it is making a new round of momentum, and the stock has not gone into the indicator has not gone into the oversold. It has just taken a breather. It has come towards 50. And again, it is coming back into an upward move. So this gives you an idea that yes, the stock still has got a lot of steam to go furthermore. So this is a very good example which one should realize that when the indicator only halts at between 40, 50 and again bounces back, that means it is a continuation. The stock was only taking a halt. It is not the end of the rally. It is a continuation, and we may see an attempt of going further high. So see, that was another decent up move that we got. And the minute again, when 80 levels was broken, of course, one had to exit the stock. Similarly, very good example over here. Once again, you see that strong uptrend has begun. So the stock rested, the indicator rested when it was consolidating. The indicator has only rested at 50. The minute you see the crossover of the strong line over the dotted line, it gives you that the stock has got steam for further upward move and go through the rally again. and exit when it reaches the 80 point. So these are the examples how the indicator also moves when it is a strong upward move, when it is a sideways move. Sideways move means it only oscillates between 20 and 80. We don't see deep oversold, we don't see deep overbought. And the median line is where we see that the stock is just taking a breather. This is another strong example of a positive divergence. See the morning star, and here is what, this is actually not a positive divergence. This is a reversal trade. This is a reversal trade. It is not a positive divergence. This is a reversal trade. Why do we say a reversal trade? Is because the oscillator is making new lows, but the stock is making higher lows. So this is what we call as a reversal trade. In this section, it is not a positive divergence. Mind you, this is the opposite of positive divergence. We call it a reversal trade. So the indicator is yet to show an upward move, but the price has already started showing reversal. Now, as we studied the three white soldiers, now let us see how the indicator is going to help us. I repeat, when these occurrences happen at the bottom of the price movement or at the peak of the price movement, it holds a higher value. So now over here, anyways, the first candle is indicating more or less a bullish engulfing, followed by the second candle, which gives a bullish view. So we would have taken some position over here. The stochastic also is bouncing back from the oversold. And once you see that the stock has shown three white candles, three white soldiers, we see that anyways, logic says, just with the study of candlestick, that yes, the stock is ready for a strong upward move. And you see over here, number of times the stock is not dipping, just gives you a breach, but again bounces back, gives you a breach. So along with this, when the stock is giving you a breach, you have to take the low of that candle as the stop loss. So if the stock goes below that, you will exit. But if it does not go below, you will continue with the trade. And this is what is the continuation strategy that the stock is going to show. First of all, three white soldiers is going to tell you that yes, it's a strong upward move indicated. Along with that, RSI trying to break, but no, again bouncing back. So it is a continuation trade showing that the stock has got a lot of upward movement steam. Now, in another very, very classic example, the indicator continues. So what did I say? We do not exit till it is in overbought, because the overbought situation can last for a very long time. Only when there is a confirmation. So look at this. The indicator has stayed in the overbought zone for a very long time, and the stock has continued to surge high and high, making new highs. Only when you see that the stock has shown signs of reversal with the over here. Also, you could say when the stock is breaking, the indicator is coming below 80, you are seeing that there is a negative divergence also taking place. The stock is making new high, the indicator is making lower highs. So that is what it implies, that there is fatigue coming in the bullish upward move. Time to stay cautious. Either book partial profit or keep your stop losses and exit the trade when you see that the indicator goes below 80. So this is what we mean by the supporting tool indicator with your candlestick study. Another example, the stock makes a dip. Well, you could book the profit over here. Of course, one would. And then again, you see that it has not even gone to 50 level. That means the stock has got still further potential. It is a continuation trade. So once you see a crossover, again buy small quantity and just go through it. So the first major quantity will be bought at the initial trade, because when you get repetitive trading indications that yes, it's a buy, the strength will keep diminishing the higher you go. So the first active reversal trade that you get, one must go all out, because that is what is going to imply the maximum upward move. Then you wait and watch, then gradually keep increasing as you get repeated by strategy signals. Here is another example of JSW Steel. The indicator continues to be in overbought and the stock continues to rise. So do not exit unless and until the indicator tells you to, and that is when it breaks the line 80. This is another signal. Now, one more hint over here is, well, you see that the stock after this is Hinduja Global, you see the previous downward journey, indicated deep oversold. Now have a look over here. To an extent, we have seen over here also what is the formation, if anyone can see. Little bit like morning star, not exactly like a morning star, but the formation of a doji indicates that yes, the stock is showing some exhaustion in the bears. The bulls are coming, taking part, and then followed by a bullish view. So over here, you will add some quantity just with the study of your candlestick. Add more when the stochastic is coming out of your oversold zone, keeping the lowest low as your stop loss. Run through the rally. Maybe you may exit over here, but as the indicator is not even breaking 50, it is come again bouncing. And with the occurrence of the three white soldiers, you know that the stock is ready for three white soldiers or three black crows indicate very, very strong move, either upward or downward. So that is when you go all out to add furthermore and then run through the rally. So we studied bullish piercing. I repeat, bullish piercing is what? When the downward journey, the red candle is there and followed by a subsequent new low. The opening is new low, but the bull participation is massive, whereby it covers up at least 50% or more of the previous candle. So that is bullish piercing. Now let us take the help of the indicators. Right here, we see this is Zomato. When at the level of 40, when there was so much of dismay, there was so much of people were disillusioned with the way the stock had moved right from the primary issue that it was the price was much higher and we saw the 40 levels. Everyone had lost hope. And I think just last week we have seen a high of 68, 70, I think. So this is what has happened. With the study, if the timely execution of trade is taken, just see how the return, this is just now, just in the period of 10-15 days that we have been witnessing. Let's count the candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Yes. So exactly 14 working days. See the return right from 40 levels to 70. So what we are talking about, 80% return? Yes. So have a look with systematic studies, stock being oversold, deep oversold, the bullish piercing occurrence with the support of the stochastic, and how beautiful. And are we now ready to book profit? Not yet, because the stochastic is yet in the overbought, not yet giving us the sign of reversal. Similarly, Ultratech Cement, needless to say, so self-explanatory. Shriram Transport also. Once again, now over here, bullish piercing. Shree Cement, we saw that the stock bottoming out. So stop loss should have been at the lowest low. The lowest low have we put as a stop loss. We add some quantity over here. Then as you get the confirmation also with your indicator, you add furthermore. The stop loss remains intact at the lowest low. Then as the stock keeps going higher, you keep elevating your stop losses. And so at least with all your efforts that you have entered the trade, it should not be a failed trade. You at least have some profit in hand. So this is how you will carry on your trading strategy. Now here is the bullish positive divergence, the bullish occurrence. The indicator is making new lows and this is the reversal pattern. What we had studied about positive divergence is the indicator makes a higher low and the stock makes a lower low. In this case, this is a reversal pattern, and whereby the indicator is making new lows, but the stock is making higher lows. So this is a reversal pattern, but yet giving you a buy bullish signal with your bullish piercing pattern also, and the stock coming out of the oversold zone. We studied the hanging man. Hanging man happens at the top of the rally. Hammer happens down. So now this is where you will look for. All this while we studied how we will get into the buy strategy. Now you will be studying about the selling strategy. So the stock has peaked out. Just 1 minute. Yes. So now we are going to study how to create sell strategies. Earlier we studied hammer. Now we are going to study hanging man with the sell strategy. As you can clearly see, the previous rally was upward rally. Then we see the occurrence of a hanging man, whereby you may, as an aggressive trader, can at least book profit, or you may go short sell because you know you are in an overbought zone, keeping the stop loss a little bit higher than the high made on that hammer day, hanging man day, and then confirm it with the indicator breaking the 80 line. And of course, with the supporting study of your candlestick, you know that you are in the right side of the trade and go through the trade with your indicator supporting you. Where would you exit? At least when your indicator gets into the oversold zone, at least book partial or wait and watch or keep trailing your stop loss, so that if it continues to be in the oversold zone and the stock continues to fall, you are not missing out on the continuation of the trade. So this is how you will plan your strategy. So as beginners, I would say that one need not go into so many calls. One can just do, first, as I said, for 1 week, at least do paper trade. If those who are totally new to it, please just do a paper trade on basis of this study. And then once you get the grip of it, once you know how to set your stop losses, once you know how to book your profits, it will become easier, and then you can get into active trading strategy. Because what will happen is that once you get into the trade, you know that yes, it is your money that you are plotting. Because paper trade, yes, you will become a bit lenient. But when it is really the money, till you don't follow your discipline, if you do not observe your stop losses or if you do not book, you will never get a chance again to get into the trade, because you will be exhausted with all the money that you have. So the rules are, to get winning trades, you must also follow discipline. That is the prime rule of any trading strategy, because only then can you sustain in the market. Because I will tell you, just in the last fall, I have come across so many people who are holding futures, stocks and futures, and paying mark to market was so difficult. Some of them had to really book deep losses. Some of them have, with great difficulty, with great tension, have managed to hold the buy side of the trade and yet be on the wrong side and go through that pain. So that is not what we are here for. We are here in the market to try and make money, and at least you may not optimize your trade, but at least be on the right side. And that is where your discipline, your understanding, everything will help you to make your own trading decisions. So I have enacted the chat. So those who want to ask questions can please put your questions on the chat box. So once we are done with this lecture, we will be answering all your queries. So please kindly put all your questions on the chat box, because we will be soon completing our lecture, and then I will be there to answer all your questions. Now the other one, what we are studying over here, is again a hanging man, and see how well your stochastic indicator has helped you to run through the sell side of the trade. So the beauty of those who are observing, doing stocks and futures, and if you are a disciplined trader, the beauty of it is you are active, you are not sitting idle. At both sides of the journey, whether it is an upward move or you are in a downward move, you are actively participating and making money from both sides. So that is the beauty of futures. But well, this is only those who can afford to do it, those who can follow discipline, because otherwise it can burn you big time. Now the other one is again the example of Pidilite, and just see how beautifully it has been done. We take a short position at the hanging man, and mind you, even the previous candle was like the bearish piercing and dark cloud, what we call, and it has also given us a further confirmation. Once the indicator breaks the overbought zone, it comes below the overbought, and we see the one-way downward journey, and of course the high is the stop loss. Then we come again with another example whereby it is confirmed. This is overall reality just in the recent past, April, whereby you see that there is a doji. It is also an evening star and followed by hanging man occurrence, also the break of 80. The stochastic indicator goes below. So we go all out. We can do increase our sell position once we get double confirmation. I repeat, only one indication in isolation should not be taken into consideration. That is just for our understanding, but a supporting tool is necessary. And I would also request you that when you are doing the trades, please make a logbook as to why you have taken that trade. So that will help you to make your fundas also correct, and also as to if you go wrong, what happened. So that will really help you to have a systematic trading strategy. Now, as we spoke about dark cloud cover, let us see how it helps us. These are all the selling strategy ideas, because all this while we did the bullish buying strategy ideas. Now we are doing the selling strategy. Similar dark cloud occurrence confirmed by the stochastic shown as in the arrow that it is breaking the line 80 and we get the sell signal. Now over here, you can also say that we are seeing a negative divergence. Have a proper look. The arrow is shown where we are peaking out. The indicator as well as the stock is giving us a sell signal. But another thing to observation is we are seeing now negative divergence. That is, the stock is continuously making higher highs, whereas the indicator is making lower highs. And that is the meaning that the bulls are getting exhausted. It could be the end of the upward move. And so we have got three ideas over here. The dark cloud cover, the negative divergence as shown by the higher high in price and lower high in the indicator. And the third confirmation comes when the indicator also goes down, and very strong position is that yes, a gap down opening has taken place. So yes, we are on the right side of the trade. That is, we have gone short sell or at least optimized our profit. Similarly, along with the bearish, the dark cloud, we are seeing the negative divergence and we are getting the sell strategy right. Now here, as the stock has been consolidating, I will not go all out because I told you that these signals should come at the peak. So we won't get much of this. I would just take a small trade in such an example because we have not got this type of a formation. This would be called as the continuation of the sell trade. Yes, Mr. Gopal Krishnan, I will be answering. I know you have raised your question. I will be answering all the questions. Let me just finish because once I break this, it will be confusion for others also. Now, again, a very, very classic example. See, this I would definitely take this trade because the prior journey has been a strong upward move, which was at least 15 candles. Now we are getting a dark cloud formation. Also, the indicator being in the overbought. to an extent a negative divergence. So three strong moves are convincing me to go short sell. One is after peaking out, having a dark cloud cover, stock being in the overbought already and showing negative divergence. Have a look at the stock price and have a look at the indicator. It is a negative divergence. And then the indicator finally coming out of the overbought, breaking the line 80, convincing that yes, the bull rally is over for now. Now, as we studied bearish engulfing, we just did it in the morning right now. Have a look. Bearish engulfing formation, the negative divergence forming, a classic example of a sell study. One more case. Over here, I will not go all out. Why? Because my indicator is still in the 50. So from 50, I know there is going to be a sell strategy, but I could take it as a continuation of sell. But I will definitely participate because bearish engulfing has taken place and a sell signal has come. So partial trade I would definitely do. Here I would go all out because the stock is, after the previous rally, it is coming from the overbought zone, and there I would get a scope of a good substantial downward journey. Here too I would go because we have seen a decent run up, though not all out because the previous movement has not been though the candles have been big, but well, there is not a count of 15. Similarly, I would not go aggressive because the the stochastic is already in the middle of the road. So, well, I would take partial. Again, wait, is the stock ready to make a new high or it is failing? I would go add better position over here because the stochastic is giving me an opportunity. Why? Because it is coming out of the overbought zone. So we see a substantial upward move. Again, in the overbought zone, we are getting some ideas that yes, the stock is consolidating at higher highs, failing to go to the previous high. So that means it's ready to make a new low. So that is when I would go all out to go for a sell strategy. And over here, as I told you that the stock moves in a whipsaw, it never falls in a one straight line or it never rises up in a straight line. So these are the whipsaws that one goes through. But well, that is how the stock market, every stock goes. So this is what we have to keep in mind. Then we will take an overall scenario that this rally, is it making an attempt to breach the previous one? Is it even trying to reach the previous high? No. It has only been consolidating over here. So once it comes out, the stochastic is making an exit from the overbought. We know that the stock is likely to make at least the previous low. And then we can see that it is falling further. So we continue to go short sell. Now here is the bearish harami, what we studied. So again, an indication by itself from the candlestick that yes, there is fatigue. The bulls are now getting exhausted, and supported by the view of stochastic, we would go short sell with the stop loss of the highest high between these two candles. And for starting purpose, it should not be the highest high. One can keep 1% higher than the high of the price because most of us, everyone follows technicals. So just to prove us wrong, market can breach the support or the resistance levels. So I would say keep your stop losses when you're a beginner to maybe 1% above the high of that trade. Yeah, so that will be in a safe, that will keep you in a safe your stop losses won't hit easily. This is how another trading strategy with the bearish harami, we are seeing that the stop indicator is also getting out of the overbought, and that yet I will go for a sell strategy. Now, this is again a classic example of a bearish harami. I will not go all out. Why? Because I'm not coming out of the overbought zone. I will take some portion, but then with the supporting view that yes, my previous low is broken. Have a look, the previous low which has taken place in March is also being broken. That gives me the indication that yes, the stock is ready to correct further because the previous low has been under threat. We are likely to see a new low. that is when I will add more when I break the previous low. Now, as we are going through so many charts, we know that there is not a set rule. Technical analysis is not about only studying one or two. There are various observations. There are various different ways of looking at it. So only when you keep seeing the charts, you will understand that how and why does these occurrences take place, and how and why should you take this trade. There is not a foolproof trading straight that yes, once I've seen this, it is sure shot that yes, this is what my target is going to be. This is what, there can be a change. So you have to be flexible in your thought process. Also, the minute there is a change in indicator or the candle formation. So one has to be very, very flexible in the thought process if the indicators tell you otherwise. So please keep this in mind. It is just a study of presumption and assumption on the study of the previous data. You are projecting, it is a projection. So your study, your understanding, and your flexibility with each day the movement takes place has to be there. Because at one fine point, I may say if the low is broken, I may say that yes, we are ready to break the low and go further down. But sometimes it could be a misleading movement also. So immediately change your view if the stop loss is hit or if the indicators are showing reversal. Now, this is another case of a bearish harami and beautifully supported by a clean downward journey of the indicator. So not much to worry. It is a very clean chart, very easy to understand, and go in for a sell strategy. Evening star, we just studied the opposite of morning star. Over here also, I will not go all aggressive. Why so? Because I'm just in the middle of the trade. I'm not coming out of the overbought. So I may not see a strong move. But when will I go strong? I may probably go strong if I was getting a buy signal here. But I'm not getting a buy signal here because my candles are not supporting me. I will just take a small trade over here as a buy and then continue to go short sell if my previous lows were broken. So in the previous rally, when my low was broken, I would add more to the sell strategy. Same way, this is a sideways move, but quickly exit when your indicator is not going into the deep oversold, but showing you a bounce. So this is what we mean that, okay, take what the market gives you. You have to quickly change your view. Though you are on the sell side, you may not or maybe get small profit, but exit immediately as the indicator shows signs of reversal. A classic good case, because why would I take an aggressive sell strategy? Why? Because the previous rally has been a prominent upward rally. We are seeing an occurrence of an evening star, and also the indicator is coming out of the overbought. So all the chances of showing good, decent corrective move. Over here again, I would go for a decent size of short sell strategy. Why? Because indicator is showing me that yes, from the overbought I am exiting. The stock is not making the new high. Evening star is occurring at a lower high. That means the stock is not having any strength. So I would go all out to sell here. 3 black crows we just studied. So what does it mean? Strong downward move likely to happen. So, and this is what exactly we are seeing. In sync with the stochastic, in sync with the 3 black crows, we are seeing a good downward move coming in. Again, the stop loss would be the highest high and get into the further sell strategy with the occurrence of 3 black crows. The first one would be taken as the dark cloud with the stochastic getting out of its overbought. We take some position, add furthermore to best of your conviction because we are seeing 3 black crows. Similarly, over here also go all out. Once you see this is an evening star also followed by a 3 black crows. So we are going to go all out, add more on the break of 3 black crows. Similarly, in this also, needless to say, it's the same definition, same understanding. This too is a very, see, so as you see in these charts, the examples that we have given, how easy it looks. But this is on the hindsight. We have already gone through this and we are doing case studies. But when you are there in the trade, there is going to be some tension, there is going to be some anxiety. But as long as your rules are intact, you will definitely come out with winning trades. Here we go. With the doji on top, we see that the stock is showing exhaustion at the higher levels and we see the downward journey coming in. Similarly, with the doji for a reversal of a bearish trend, we see support coming from the stochastic, and from there on, we see a reversal. So again, a decent up move coming in. So mind you, again, the rules are entry with the candlestick study, small entry, supported, add more to your positions when it is supported by your indicator, add more with your position when the previous highs are broken, or keep, if you do not want to add, at least keep elevating your stop losses when your previous high is broken, and continue with your journey as long as the indicator moves towards the overbought, continues to stay in the overbought. Only exit comes when the overbought is being broken and the indicator is piercing the line 80. So this is the again the formation, and yet we see a decent upward move coming in. Once again, a decent good up move coming in. And I said over here, again, a continuation trade. If you have exited with the bullish candle formation, again, go all out to buy because it is a continuation upward move. This would be a small trade, not to my liking, but yes, some of it I will go aggressive only when I will add to my position only when my previous low is broken. So that is, I'm talking about 25th October, what you see the low broken on 22nd, I think on 22nd of November, that low is broken, I will add to my sell position. So once again over here, rules are the same. The highest high has to be the stop loss. And as I told you, for safety purpose, if you can be liberal, a little bit liberal with your stop loss, so your stop losses don't hit easily. Then as you are on the right side of the trade, keep gradually lowering your stop loss when you are on the sell side. So this is similarly the same pattern. So I conclude over here, and now I'm please ready for all the questions that you have, and let's get going with your question answers. Now there is, before we do this, before the question answers, there is one more chartical presentation. As I had discussed yesterday, there are 3 case studies, which if you wish to, you can use it for maybe a paper trade, or if you would want to take with some quantity, if you are a future trader, yes. So I have brought to your notice the 3 candlestick formations supported by the indicator. Now, one was, yeah, here are the examples. I'm sharing the screen right now for my 3 case studies that we were speaking about yesterday. Is it visible now? I'm sure it is, yes. So, these are the 3 examples. Now we begin with Bank Nifty. Have a look. There is a prominent bearish engulfing. So as a trader, what would you do? The high of this candle, that is, I think 39,750 yesterday we saw the high. So maybe 39,800 on spot basis. This is the value on spot basis. So future price could be a bit different, but spot basis. You can at least go marginally short sell at this level because the stochastic indicator is still in the overbought, not broken in the 80 zone. So you may go all out once it breaks the 80 level, it breaches. But for now, for case study, you can take the highest point of these two candles as your stop loss to get into the short sell strategy and confirm it once you are on the right side. If you are on the right side with the stochastic breaking 80, you may see this Bank Nifty going sliding at least towards a level of 38,000 levels. So this is an observation. We have prepared this because this is just the occurrence which we have witnessed on Friday. Today's Saturday and Monday. Let us see how we open. So this will be one example whereby traders who are willing to do systematic stop loss based trading can do so, because this is a very, very fresh bearish engulfing occurrence which we have witnessed on Friday. Second is the bearish piercing, which we also call the dark cloud. Have a look. This is what I'm talking about, Dabur. It is also showing a negative divergence. The stochastic is below 80. The bearish engulfing. So what will you do? The stop loss of the highest high. So somewhere around 600 levels. And if this trade falls right, you will see this stock going to 570 to 560. So which gives you a favorable risk reward ratio also. It is just the beginning of a sell trade, and you can do this either a paper trade or you want to do active trading. Please follow the stop losses, follow it with your indicator. And of course, I will be there. We have from the group chat, so we can participate and take the call accordingly. The third one, if you can see, have a look, just the beginning. This is, I think, TVS Motors. So we see that the doji has been formed, followed by a bearish engulfing candle. I think this is TVS, 1 minute. Yes, Mr. Prasad, I will be talking to you about this. 1 minute. Yes, so this is TVS Motors. We are seeing that there is a doji formation. There is a negative divergence taking place, and the confirmation will come once we break the 80 line. But with the stop loss as the highest high, that is between these three candles, a little bit higher, one can go short sell to see that the stock can go to 950 levels to start with. And below that, we can see the stock also going to 930. So this is what we would be witnessing. And let us do, because over here, the risk reward ratio is not very, very feasible. If the stock sustains, let us see it comes closer towards 970, 980. We would be happy to do it because the stop loss will be closer. 1000 will be the stop loss. So let's wait and watch. But these three prominent formations, what we have seen, and this will help you to make your trades the right one. So I conclude over here. Now we shall start with the questions. For all the above patterns, what time frame we can use? I repeat, all these patterns can occur on every chart, on 75-minute time frame, on hourly time frame, also on 15-minute time frame, and also on daily, weekly. The rules will remain the same. What is paper trade? Paper trade means you do not put your money into trading. You will just do, on the basis of study, buying, making a buying strategy on paper, that I'm buying at this price, I'm putting a stop loss over here, and I will go with the buy strategy. Once you see this price movement taking place, you will analyze, are you on the right side of the trade with the indicator, and where are you reaching? What is your profit? That is what I mean. Not active money participation, but just putting your trades on paper so that you know how your trading strategies are falling. That is what I mean by paper trade. With all these work out well in case of big gap up and gap down. How to manage such unforeseen happening? Normally, I will tell you the gap up or gap down. In my experience, it always goes well in the direction of the strategy. So now, if Monday, if it is a gap down, and if I have gone short sell just on the study of bearish engulfing on Friday, it normally goes well within my understanding. The gap ups and gap down happen in favor of the view. So if I'm in a reversal and if a gap up takes place, it is in my favor. If it is a gap down, very few times when it is news related, when something adverse has happened, well, then of course, as I told you, all trades are not going to be winning trades. One has to follow stop losses. You can witness lot many losses. It is not a foolproof. You have to have discipline, and that is where, well, but then the beauty of it is that if you have gone through a failed trade, you have to have the wisdom to exit and get into the right side. Chances will be plenty, but discipline is where will get you going and help you stay in the market. Can we use this pattern study and trade option strategy? Well, option strategy depends as to how the stock is going to perform, because as you are seeing, these stocks have taken a time also. They have been consolidating also. So what type of option strategy? Yes, but for an intraday option, then all if you're doing, I think it will work well for a 15-minute to 30-minute. For intraday options will work well. For positional, well, I will not be able to guarantee, because you will have to see your open interest. You will have to see your built up and all that, and the momentum of the trade, because sometimes stock just consolidates and then it moves. So technicals will be different than the options. All your presentation made by far so far relates to traders or someone who wants to trade on a daily basis, and not for investors who want to keep the stock for 5 to 6 months. Well, if you see the positional trade, there have been ideas where it has gone for months. So similarly, if you see these patterns occurring on weekly chart, you will definitely go on 5-6 month rally. You see the chart of TVS Motors, you see the chart of Grasim on a weekly basis. The rules, as I said, the rules are the same. Whether it is for an intraday trader, whether it is for a momentum trader, whether it is for a positional trader, or whether it is for a 5-6 month holding this. So please mind you, these rules will remain the same for whatever your time period is. How to identify a big fall in intraday trading, madam? With the help of candlestick. The same occurrences, the reversal, the candlestick formation showing. Now this bullish engulfing, this bearish engulfing with the stochastic getting into 50. These are all strong indications that it will show further strength. The rules will be the same. Don't get confused, please. The rules are the same. The reversal pattern, if you see in Nifty, even on a 15-minute, after a run of 15, 50 to 60 points, you may see a reversal pattern, that is a bearish engulfing or whatever, or a bearish piercing or a bullish piercing. That will all help you to get your intraday strategy right. How to identify a big fall? Well, you have to run through with the, you cannot identify, you can never preempt. Preempting is not what we do. We follow the rules. By preempting, you will always get disappointed. You have to follow what your indicator tells you. That is the golden rule of technical analysis. From now on, if you tell me whether Nifty is going to break 16,500, I will not be able to say. But if you ask me whether the Nifty is going to breach 18,000, I don't think so, not now. Whether Bank Nifty is going to breach 40,000, I don't think so. Why? Because we have seen a good run up. We are in the overbought zone. We have seen a bearish engulfing taking place, but the confirmation further on will come with the break of the indicator also. So this is how I will evaluate and form my strategy. I may have gone short sell on Friday on basis of only bearish engulfing, but I will furthermore add if my indicator is supporting me, and my stop losses will be above the high of the highest high. This is how you will fall. And big fall, big run up, that only time will tell with the occurrence of your candle formed each and every day or each and every hour. That is how you will gauge and evaluate your stocks. To see the live graphs, which software I have to use. I told you tradingview.com, charting.com, these are all there, which are giving you the live charts. How do we find out breakout level, madam, in stock specific? So breakout is another study. When the stock tries to move up above the previous high with higher volume, you have all the chances of a successful breakout happening. So with the trend line study and all, you will see that right now, if you see SBI has got a cluster of resistance on higher level at 545 levels. So that is where if it moves above that, it will be a breakout level. Any stock picking ideas, please, for both bullish and bearish according to the trend? Let Monday start. We will give you, right now I've given you 3 examples. So I guess I have answered all the questions. How it helps for long-term investors, for how long period? How it helps, as I told you, it is going to be the same study. The study remains the same. So when you know that when your indicator is coming out, but the problem is when you are going to be a long-term investor, you also have to take help of the smaller time frame, because when you make an entry through a longer time frame period, your stop losses will be much higher. Your targets may be much higher. So the entry has to be through, suppose you are a weekly chart follower, for an appropriate entry, you will have to come down to a daily chart to minimize your risk appetite, to get a better entry level, because you have to be able to go through that stop loss. Because my buy, suppose example in a Larsen and Toubro comes now at 2000 levels and my stop loss comes at 1500, can we bear that stop loss? I don't think so. Not wise for anybody. So for higher time frame, one has to, for an entry, one has to drop down to a lower time frame. Can these pattern hold good for stock trading in future? Then of course. So this is because open interest built up, momentum can have an impact. So that is all. See, futures is different than open interest and all. Open interest and all works well for call and put. But for futures, you will always see the volume also. So this has to go in sync with the rules are the same. I am following the pattern. I am using this since years, and I can definitely say that the rules are the same. There is no different study. Yes, with the study of open interest, your choice of stocks can improve, because you know that, yes, this is going to have more of momentum. This is going to be working well for a short-term period. But when you are in a long-term period for a positional trade, your open interest and all will dry out also. How to find short covering in intraday? Same. If there is a reversal in the indicator, it is a short covering. It's a bounce back. What do you mean by short covering? It's a bounce back. Now I have the poll. So people who have the queries can talk. They are free to talk and I will reply. So first I would like you to finish this poll for me, and then we can go through the questions again. I would like to have your feedback, and that will really help us to take this forward, where we need to emphasize more as to what your requirements would be, whether this webinar has been helpful to you. Your feedback is really appreciated for the same.
I hope the poll is visible to you.
Thank you everyone for the feedback. And now I am here to answer all the questions that you may have. And I really appreciate your for your participation, and I hope this has worked very well for you. So we will be connected because now that we have the WhatsApp group also. Request you to have one presentation webinar exclusively for investors. Definitely. Want access to the recorded version for repeat understanding. Surely it will be given to you. So we will be sharing our views. We will be in touch for some time, and I will be very happy to solve all your queries and help you to become a successful trader to the best of my capacity. And we conclude here. Still, I shall wait for some more time if you have any questions to be asked. Does anyone want to speak?
Yeah, very good morning. This is, I don't know whether you are able to see me. I can at least hear me.
I can hear you.
Yeah. So thanks. Wonderful. In fact, you put in some very good effort, excellent analysis. Only thing is, only I'm not a trader, so I didn't find much beneficial. But I'm looking forward to another webinar for investors. So I just invest and then wait for 5-6 months for the stock. But this was good. You have made a very thorough analysis. I really appreciate your time and effort, and keep it up. I just wanted to thank you.
I'm glad. So to answer your question is, see, basically, when would you become a long-term investor? When you have a fundamental study, right? Am I right?
Correct. Yes, yes.
So for that, of course, it is very essential to follow the weekly and the monthly charts because that will run you through for 5-6 months. Like for example, let's talk about Tata Elxsi.
Right.
Investors have taken part, right? So now you might have known this stock from the time it was 700, 800, or perhaps even 2000.
Yes.
I tell you, my entry in this stock was from 2000 levels during COVID times.
Okay.
So, well, so when I saw my first entry came from the daily chart. Okay. So when daily chart gives me a buy indication, the progress is higher. That is when it becomes positive. After a good run up, it becomes positive in the weekly chart, right?
Right.
After it's still a further run up, then it shows improvement in the monthly chart.
Yeah, correct.
Right? So your entry, when you are having an analysis of your stock, say hypothetically right now, if we talk about let's talk about some stocks, maybe we can talk about Tata Motors.
Okay.
So if you know the report, you know that the future is very good. We are expecting maybe because of EV cars, we hear reports that this stock will go to 800. But when you are a long-term investor, will you make your monthly chart will give you a buy signal only at perhaps 450 levels or so. And your stop loss will come to 350. So if you're making an entry at 450 and your stop loss comes to 350, is that a wise trade? No.
Hmm.
So what I am trying to tell you is that when you are banking on your fundamentals, you will first downsize. I may not tell you to go to 75-minute chart or an hourly chart, but you will at least go on the daily chart for the right entry. Maybe
Okay.
your daily chart will give you an entry only at 380.
Hmm.
Your progress, you as the stock starts showing improvement, it progresses higher, you will come down to your weekly chart. Your weekly chart will start showing you the first blue candle, the first reversal sign and all, and then you will put your stop loss, right? But you have
Correct.
already made an early entry. That is what
Correct.
I'm trying to tell you, that your early entry will only come from your smaller time frame chart. Then these same rules, what we have seen right now,
Mhm.
will be applicable even on your weekly and your monthly chart. When you see progress on your monthly, so your price projections, your say maybe your holding capacities for the same stock for 2 to 3 years, you don't want to exit. You will evaluate your price projections with the study of Fibonacci and many other things from your monthly chart, because that is when your projection will come. But your ABC will start from daily chart. For
Okay.
your for your further conviction, for your further confirmation that you are on the right side or you are in the right stock, you will then progress towards weekly and the monthly chart. But your entry, according to me, should come from the daily chart.
Okay. So now see, only challenge with me is we will not be able to keep track on a daily basis. So maybe
You should not also, because as you are a long-term investor,
right.
you
Yeah.
will do your homework on your weekly basis. Once you see your week on at the say on a
Weekly.
Friday,
Okay.
on your Friday, Saturday, you hold. You know that my daily chart will turn weak below this. So if you want to, either you want to book profit, partial profit, you may do that way, or you want to make a addition to your stock because you know you are very strong on your fundamentals. You will wait for a retracement. Then, for example, if the stock has moved from 380 to 480, right now I see that, okay, if the stock is going to correct till 440, now what would you want to do? Would you want to exit at 480 being the long-term trader, or you want to add more at 440 levels? That is
Okay.
what you
Okay.
will do. So then, you know, you will do your homework on a Saturday, Sunday.
Okay. Okay.
Yes, to see how your movement is, because sometimes see we are preempting that yes, we are in a good bull run, we are likely to see further run up, but it is market. If stock falls, then you know that no, I will exit, because below 440 the stock can again go to 400 and perhaps 380.
Correct.
Right.
I get your point.
So even when you are a long-term trader,
Yeah.
you will see that your movement of the stock is in sync with your view.
Understand.
Yes.
Right.
So for that, yes, these rules are the same, needless to say. But what I'm trying to say is that though you are a long-term investor, your entry has to be perfect. And your entry will be coming with a favorable, less expensive stock only through your daily chart.
Absolutely. You are right. Absolutely.
Have I made myself clear?
Yeah.
So now,
100%. Thanks. Yeah.
so now whenever you have queries, please see this. You can ask me, and we can sit and discuss, because your study has to be on daily, weekly, monthly. Your charts have to go in sync.
Very true.
Right? So you may have that bias that no, my chart is positive only. I am looking at monthly, but you have to take support of your daily, maybe for your addition of your stock. And if you are an investor, you are not going to be more than 10 to 20 stocks for investment purpose. So your homework will become very easy on a weekly basis or on a fortnightly basis, depending on the trend of the market. You must do your homework.
That's a good point. Yeah. Fewer stocks, you can devote more time for analysis.
Yes. So being an investor, it's not possible to have 50 and 100 stocks as an investment perspective, right?
Yeah.
So that is how you will choose your time frame. If you are an investor, please start with your daily and then progress. Keep seeing all the charts to get the generalized view. So right now, why? Now, I don't know whether you are active with Prabhudas Leeladhar or not. Now, we have given Larsen and Toubro as our trading strategy, just for your understanding, okay? I gave the call at around 1800 levels. Now, yesterday when the stock came to 1940, because that was as per my daily chart, my resistance coming at 1950. Okay. So as a trader, I have asked, I have got 10-15%. I am happy with this. But for an investor who's still seeing, I will say, hold on, or now keep 1850 as your stop loss, or buy near that support level to see the next run up of 2050. So that makes an investment view, because this price projection I'm taking out from the weekly chart.
Correct.
So now you see how I'm syncing both my daily and weekly.
Yes, I can see that. I can see
My
that.
entry came from daily chart, though it should have come from 1650, because that is where it had given me the buy signal. But for a continuation trade, I have not given Larsen in my previous call strategies, but now I still feel there is scope for upside. So I gave at 1800, 1790 or something, I'm not too sure. Just yesterday we booked the stock. It is still closing stronger in a corrective market like this. But what guarantee 1950 will be held on? Maybe we may see some retracement. So for that entry, for the projection of 2050 or 2200, if you see the weekly chart, you have your entry has to be right. I cannot
Right.
enter at 1950 after I've seen the cream of the upward move.
Right.
So this is what I'm trying to tell you, that it has to be in sync.
Sure. Definitely. Thank you. Thanks a lot. Thanks for taking time to answer.
My pleasure.
Right. Fine.
Hello, Paramish, would you like to speak?
Hello. Hello. Good afternoon, madam.
Good afternoon.
Madam, in intraday, how to identify or identify the market will be volatile or uptrend or downtrend in the morning with the help of 15 minutes candle?
With the help of 15-minute candle, you have to see whether are you seeing the higher high. Is the stock breaching the previous candle? 15-minute chant. This also is the indicator coming out of the oversold. That is how you will do. Also use a moving average, perhaps a 5-period or a 7-period moving average, 10-period moving average. If there is a crossover of the moving average, is the candle, as we studied, is it showing improvement? Is there a doji? And from there on, we are seeing a reversal. All these things will help you. Are we seeing a breakout? Then what next high? There are various, yeah. So that is how you will see. So right now you learn from oversold, overbought.
Thank you.
And stochastic will be very quick, because as I told you, it's a very leading momentum indicator.
Yeah. This I had reason.
Yes. So because when yesterday I spoke to you all, I gathered that most of you were intraday traders. And I knew that, yes, right now everyone is seeing a lot of intraday strategy, and also stochastic was chosen as a supporting indicator.
Okay. Thank you, madam.
Welcome. Global indicator to be watched by dollar index movement and all. Well, that is all. There is lots to see. Don't we start our day with seeing how the Dow Jones is and how the SGX Nifty is performing? So well, but I follow this. To become a full-time trader, can you briefly suggest amount required and infrastructure? Full-time trader in cash, you should have it. I think at least you should have, if you're a future trader, you need 5 to 6 lakhs, because you will do one lot Nifty, one lot Bank Nifty at least. So you need 5 to 6 lakhs. And suggest around, infrastructure, you have to have a live trading data. So Metastock, it could be Metastock, it could be charting also people are using. So tradingview.com also people are using. What are the parameters to be considered while selecting a stock for delivery? Selecting a stock for delivery, first of all, well, so to start with, I would say choose techno-funda stocks, because as I told you at the beginning of the lecture only, fundamental will tell you what to buy, technical will tell you when to buy. So hypothetically, if we are talking about cement stocks, so the parameters are of course same, your RSI, because you are doing a positional trade. So you will use RSI, you will use your moving average, you will see volume and the candlestick patterns. Showing high open interest is a trap. I will not be able to comment on this, because as I told you, Just one thing in isolation won't help. So let's conclude here and let's see how the week goes. I have given you these trading ideas. Let's see who is participating and how, whether is it going in our favor. So good luck and stay connected. Thank you all.